What's going on, guys? Welcome back to the channel. My name is Steve. I'm your mortgage broker, president and founder of AUE Lending. Today I have a special one for you guys. I want to discuss down payments. I know this is a big concern for many people because they read something online or they play around with some calculator, or they maybe talk with their parents that might say that like, hey, no, you need X amount of down payment. Don't do anything until you have it, and then you find yourself waiting and waiting and waiting internal amount of time while prices go up. Anyways, this video is about down payment. I'm gonna cover the minimum requirements for various price categories, and then we're gonna go in depth. I'm gonna show you 4 sources that you are honestly, I'm pretty sure 2 of them you might not even know that it's possible, but we'll go over 4 of them sources that you could get the down payment from. Alright, so first of all, guys, as a first-time buyer, you have a lot of cool programs available. 2 of the more popular ones that require the minimal down payment is going to be 3% down conventional loan, 3.5% down FHA loan. Now, the conventional option, you are limited to a certain purchase price. So if you're looking for something up to $748,000, now this could be a house, townhouse, condo, all depends on your market. But you could get away with only 3% down payment, which is $22,000. Now, if you're in a little bit higher price market, like we are in the Bay Area or Southern California, Washington. By the way, my company is licensed in California, Florida, Missouri, and Washington. We have access to Oregon, Hawaii, Arizona. And if you ever have a question about a different state, please reach out to me. I am connected with many different mortgage professionals all across the nation. Now, 3.5% higher price point. In this scenario, you could buy up to $1,128,000, only bringing in $39,000 as your down payment. Now, so that went over the different price points, the minimum down payment. Obviously, if you have more down payment, you could either decide to buy something higher or just borrow less, which your payments are going to be less, and I'm all for that as well. I'm very big about having lower payments. Do a separate video about ARM loans, interest-only loans. That's coming in the future. However, today we're just talking about down payments. Now, let's cover the 4 down payment sources that I mentioned. The first one is your checking savings account. This is money that you have in your Chase, Bank of America, Wells Fargo. This is the most liquid account you have. You could literally transfer funds the same day, and sometimes if you wire it in the morning, by noon it's already there. You do have to pay a wire fee, which is usually like 25 bucks at most, but the money is liquid right away. Number 2 is your brokerage account. Now, this could be a company provided brokerage account like Schwab, where you get your company stocks directly added into, or it could be something on your own like a Robinhood or a TD Ameritrade. But this is your money. You put in your after-tax dollars in there. The only downside is it's not as liquid, meaning that if you see something you like, you make an offer on Friday, and you're looking in your Robinhood app, and then you see that you have a certain amount of value, it's not something that you could sell and convert into your checking account right away. You do have to wait until Monday, the following day, when the stock market opens, which is 6:30 on the West Coast and 9:30 in the morning on the East Coast. So you do have to wait. So there's a big chance that the number you see Friday night in your brokerage account is going to be different on Monday morning. It could be higher, it could be lower. It all depends on what that prices of those stocks will be when the market opens. So again, this is not the most liquid option, but it's pretty close to it, because Monday comes around, you liquidate, you sell, you pay some small wire fee, and then you get the money into your checking savings, which is the most liquid account you have. Also, a lot of my clients now, they don't want to sell because, one, they don't want to pay the high taxes, because most of them bought these stocks even before the pandemic. Then they saw a peak, now it's a little bit down, so they don't want to sell because they don't want to sell in a non-peak environment. And then also they don't want to sell because of taxes. I mean, let's be honest, like taxes is a lot. If you sell stocks and you made $100,000, more than likely 25,000 of it you're gonna have to give to the government. So if you add that on top of selling lower than your expectation, it's not a winnable situation. So I have a solution. My personal financial advisor, he's actually helping people through one of the channels that he has get lines of credits. For example, if you have $100,000 in Apple stock, you don't want to sell it because of the two reasons we mentioned, he could help you set up a line of credit where, for example, you could get $50,000 as a check to you and you could use it for your down payment. Now it is a loan, there is a percentage, so each case is different, you have to calculate it. But long story short, by not paying taxes and by not selling lower than you want, you're still going to be winning in the long run. So that's an option as well. And then third option is retirement accounts, 401ks, IRAs. A lot of you guys are working hard. Over the years, you've contributed into this account. You've seen it grow as the stocks went into peak. Your employer has been matching it. So for you, this is like money that you've mostly probably forgot about it. But the idea is that if, say, you have $100,000 in your 401k, by rule, when you're buying your first home, you can borrow 50% or $50,000 from this account, meaning that you'll get a check directed into your checking savings account, usually within a couple days, and you could use this money for your down payment on your first house. Again, there's going to be an interest rate, so you do have to run the numbers. But what I'm seeing in the mortgage business, this is becoming a very popular option for people to tap into money that most of them forgot about in order to buy their first home. And then the last one is gift funds. Gift funds for the two scenarios and the two programs that we talked about, the 3% conventional, 3.5 FHA, you could have 100% gift funds. And guys, the guidelines for gift funds have changed in the last year and became very easy. All you have to do is have somebody in your family or some close relative that wants to help you out, contribute to your purchase. All they have to do is just sign a form saying that this is not a loan, they don't expect any repayment, blah, blah, blah. Boom, very easy. It's done all the time, but it's gotten even easier. And those two loan programs allow for 100% gift, meaning you don't even have to contribute your own funds. I've had cases where father and mother are helping their kid buy a house, and we didn't even put the kid's checking savings account on the loan application. We just put gift from parents, cover everything, and you don't have to have your own contribution. A lot of people don't know this, but guys, those are the four options. Like I said, I'm pretty sure that two of them you had no idea. One of them is the taking a loan against your brokerage account. Two is taking a loan against your retirement account. If you have any questions on either one of those, please reach out. My team and I would love to assist and explain this to you in detail and how it could help you make the first step into buying your first home. Guys, again, thank you so much for watching. I appreciate all of your love, your likes, your comments. If you haven't hit the like yet, go ahead and do it. It does help the channel. And if you ever have any questions or you want to get a free consultation from my team and I, please leave a comment below. My email is in the description, and looking forward to connecting with you guys on the next video.